The only thing I just want to make sure that everybody understands with the AI trading platform, it is the perfect vehicle to protect and preserve one's retirement account from what in particular market drops. That's what it's designed to do.
Before, Ramez Fakhoury was the vice president of one of the largest IRA custodians in the country. He was owning and running restaurants, hospitality, then real estate, then financial services. 2 decades of operating businesses across 3 different industries, which is exactly why he sees the world just like the entrepreneurs and accredited investors that he helps every day. Throughout this series, we've been dedicated to giving RIAs lots of different perspectives. We had Phil Shankweiler, who made the institutional case for private markets. Andrew Beer told us what public markets can't replicate. We sat down with Jake Heidkamp from FactRight to offer you all of the information on due diligence for a new sponsor. Today on Wealth Unfiltered, I have Ramez Fakhoury, who will walk us through the self-directed IRA playbook. Thank you so much, everybody. I'd like you to help me welcome Ramez to the show. Hi, Ramez.
Samantha, thank you for having me. It's been a pleasure always working with you and your team, and I'm so looking forward to this podcast. Thank you for the opportunity.
Absolutely. So I know I had mentioned this last week, but this podcast is in a part of our large series. It's on advising the modern allocator. And the reason I think it's really important for you to be here, because most people might think, why do we need to hear from a self-directed IRA? But there are a lot of really fantastic things that you're doing in the space that I don't think that people know a lot about. And so first and foremost, I want you to introduce who you are, a little bit about your background and who IRA Club is, and then we'll jump into why you should be here.
A background's a loaded question. I actually believe you're laughing because you're one of the rare people that do know this. I actually come from the hospitality world. A lot of our clients that do ask me that question can't believe it because the knowledge base that I actually have acquired from our fearless leader, Dennis Blitz. If you guys ever have the opportunity to meet this man, he's the president and founder of IRA Club. I kind of refer to him, Samantha, as Master Yoda when he's walking around the office. So if you ever understood the concept, the McDonald's concept, right, of owning real estate first and then the actual restaurants itself, right, that's kind of my background as I come from hospitality. But my family, per se, has been in the real estate game for as long as I can remember. And I'm talking about the early 80s. 90s up until the early 2000s. So they've acquired, I would say, including myself, because I've been part of that team now for some time, probably about a little over 2 million square feet amongst my uncles, my father, on both sides, by the way, my mother and father's side. But again, you're real estate guys, first and foremost. I just, again, come from the hospitality world and kind of put together this McDonald's model. How did I get into the whole finance world? It's always about a girl when you do something, right? Right? That's it. So if you ever seen the movie Good Will Hunting at the end, right, when Matt Damon passes along that note to Robert Williams, I had to go see About a Girl. That's kind of me. I had to go see About a Girl. I actually went to an event that she was at. She was working, and believe it or not, was the very first employee for Dennis here at the IRA Club. And she invited me to come to, again, a real estate summit by Robert Kiyosaki in Vegas. And I actually went there with the intention to meet up with some of my buddies. The funny thing, Samantha, is I never left the event. So I actually enjoyed listening to these gurus, real estate tycoons, listening about all different topics of discussion, tax strategies, asset protection. It kind of really blew me away because at that time, being a young buck, I was like 28, 29 years old. And I thought I was doing very well for myself in the real estate world, even at being just approaching 30. I had 3 restaurants underneath my belt and quite a few assets at that point. But I was thinking about the here and now. I never thought about the future, right? And financial freedom and what that looks like, not just for me, but my family. And retirement as a young man kind of goes to the wayside. You don't think about it too much. Not something your mother, your father, you sit about at the dinner table. You talk about what I'm talking about. You talked about that, kind of in the same boat. But kind of shifted over from the hospitality world, still very much in the real estate space. And I actually own a piece of all those restaurants still because I do own the assets. So again, the McDonald's model. But I was approached the day after my wedding by Dennis Blitz's wife, Gail, sitting on a beach. And she said, "Hey, Ramez, what's the next move?" Because one of the things I forgot to mention, Samantha, is that girl that I was dating, I ended up marrying. So the very first employee of IRA Club, I ended up marrying. Again, her name is Vanessa. And I said, the next move, Gail, is I'm going to sell off all my restaurants and jump in with the IRA Club. Said it as a joke. We were all laughing. After those events that I was attending, I actually applied what Dennis was talking about because I actually had an old 401k with Let Us Entertain You, which is a massively big restaurant group here. And I ended up buying parking spots with my Roth IRA account, right? I transferred over a 401k to a traditional IRA. I actually ended up converting it into a Roth, and I bought 2 parking spots with it, right? And now, currently, I have 8 parking spots in my Roth, a couple private equity deals, a couple syndications. And that's how my journey started in the finance world.
Fantastic. Well, to say that it is not a typical journey is probably an understatement, but I do love the story.
True
So
story.
then, I mean, you went from starting with them and getting your foot in the door, but now, I mean, you're the vice president of the company. So, I mean, you've had a very successful journey with IRA Club, and now you all are doing so much more than where you started out. Let's backtrack. For those people who don't know what IRA Club is, maybe let's talk a little bit more about the company.
Yeah, who IRA Club actually is a good point. Who cares about me? IRA Club actually started by, again, Dennis Blitz. He actually, for those that don't know who he is, he's kind of a big deal in our industry. We call him Mr. Compliance. So for those that have a securities license, like a Series 6, Series 7, a Series 60, 65, 66, a 3. So this is the man that actually wrote the test and the text for the US government.
Wow.
Oh, yeah, his publishing company, which at the time was called a Dearborn Publishing Company. And what he did, right, or was hired to do was to educate. He started a school, right, an educational school where he would teach potential individuals that want to become fiduciaries or registered investment advisors all over the country. I think at one point he said at his peak, he had like 52 teachers, and they would just travel all over the country. Let's just say hypothetical scenario. You have a company like Fidelity or LPL, John Hancock, Voya. There's 10,000 of them that are out there now. His company would be hired to teach their potential advisors, and think of them like glorified tutors, right? And then now if you fast forward, he sold Dearborn Publishing Company for $36 million to the Washington Post back in 2006. Should have retired, but ended up starting a investors club here in the Chicago area. That's where Chicago IRA Club is currently based, in Chicago, downtown, across the street from Millennium Park. For those that are familiar with the Bean, as we like to call it, a group of attendees just started getting bigger and bigger. What started off in the hundreds turned into the thousands. And he was teaching this strategy to the individual investors on how they could take a portion of their retirement accounts into diversifying to different asset classes. And he would use himself as the guinea pig, or showcasing how the process actually worked. Fast forward, he decided to start his own company called IRA Club. And from 2008 until today, we've helped open and fund over 25,000 retirement accounts. Just on the IRA Club side, we manage just under, I believe, I don't know the exact number, don't quote me on it, but it's just under $2 billion. Assets under administration, not assets under management, because that's the one thing that IRA Club cannot do. Remember, the term self-direction means control, right? We're teaching you how to be in control of your future. Because Samantha, nobody cares about your money more than you do. I know that. And at the end of the day, I feel like somewhere along the line, and I actually kind of know when the actual time frame was, but somewhere in that time frame, retirement accounts, in particular, the IRA, which was established back in 1974, was hijacked. I know that's going to be part of what we're going to be talking about, and I kind of like to call them artificial restrictions, but hijacked in a way that it is fully controlled by the larger institutions, right? We're going to never badmouth anybody, because at the end of the day, we are all educators, especially in our space, our world. But in particular, when you think of retirement accounts, Samantha, out of curiosity, how much money do you think sits inside retirement accounts today?
Gosh, I wouldn't even have a number. I imagine it's infinite.
It sure does seem infinite, but believe it or not, it's just under $45 trillion.
Wow.
And the problem is only 3% of Americans, 3% actually self-direct, right, are in control of their retirement accounts. And you may ask, well, excuse my French, where the hell is the rest of this money, right? Where's the other 97% of Americans storing their retirement funds? And it's honestly, it's only three places, right? It's bank CDs, annuities, and the stock market. And the majority of that, in fact, is just under 93%, sits in the stock market, right? And of the 45 trillion, right, that sits in the stock market, the big three, I like to call them the titans of our industry, Fidelity, Vanguard, and Schwab, they control just under 70% of that. Fidelity is, and most people don't know this, is a private company. It's not publicly traded, which means you don't even know the exact amount of money that everybody's making across the board within the family, the Johnson family. But here nor there, but they do control, I think, the fair share of the lion's sum, which is about 33 and a third percent. You just got to understand that there's more out there for you within a retirement account. Again, IRA Club itself, I may or may have not mentioned this, Samantha, is a broker dealer. So we do offer our clients access to the stock market. We do have our own trading platform. So it's not that we have a problem with the stock market. We just believe in diversification, especially you and I, right? Yeah. So real estate is my forte. Real estate is your forte, is what you understand. And what asset class, Samantha, trumps all other asset classes? When you think of it decade by decade, it's
real estate.
Real estate, right? Numbers don't lie. If you go Google this, if you look at the past 20 years, the stock market's going to give you what? In particular, the S&P 500 is going to give you about 326% returns on your money within a 20-year span. Real estate has given you in returns in the last 20 years. And keep in mind, investment, like as far as like investment, I'm talking about multifamily, commercial, mixed use, syndications. You're talking about 2,100% returns on your money. So it's not even close. So I just tell people, listen, it's not about diversifying your own personal dollars, right? But don't you think it's just as important to diversify your retirement dollars in the same manner? And again, it's just like we use the stock market a little bit differently in my case. And what we teach IRA Club members, our clients, is if you have real estate, hypothetical scenario, right? And let's just say rental income, royalties, dividends are coming back when you diversify your portfolio. We're just telling our clients, shift that money straight into the stock market, right? Accelerate it that way so you could get into the next deal or the next deal. But again, I do believe in, I like to call it the Yale model of 30, 30, 30, 10, 30% real estate, 30% stock market, because you want that liquidity, right? And then 30% private equity syndications, things of that nature, precious metal, whatever it is that you decide to do. And 10% you always want in cash, as much as I hate to say this, but life events happen. So that's how the top 1%, believe it or not, that's how they do it. And this is how we teach it here at the IRA Club.
So for somebody who's listening and they have, the traditional old school 401k with an employer or a past employer, and they're like, man, this sounds fantastic. I really would love to have more control. I'd like to start diversifying a little bit more outside of what I'm being given. What would that look like for them to switch from that to you guys?
Well, I'm so happy you said old employer 401k. So for those that are listening, if you currently have an employer's, like say 401k, 403b, 457, or possibly you're somewhere in the military or government employee, it's called a TSP, right? The savings plan, you're screwed. No, I'm kidding. Do want you to understand that you don't have the actual control. It's the control is held by the financial institutions until you leave that employer, right? Or furloughed or you quit or whatever the case may be. In particular, what you may or may not know, Samantha, is U.S. citizens, right? Employees per se will probably change their jobs. The average is about 4 times within their lifespan. So it's only a matter of time, right, before you actually will leave to go to a new employer where you will have access to this 401k money. But that's the only way that you could get access to it is you are either, you no longer work for that employer. Now, it's not to say that you shouldn't take an employer match, right? If they offer it, take it. It's free money. I'll always suggest that you take it. But also understand that you're limited. In fact, 88% of 401k plans sit within mutual funds because that's their definition of diversification, which is large, mid, small, international stocks, bonds. Again, not our definition, right? We believe in alternatives. And you got to think double-digit returns. at the end of the day, because the markets within a 401k plan, historically, remember, you can't touch it until you're 59 and a half years old, when you could actually, it constitutes you to take a distribution without triggering a penalty. So with that being said, you don't have access to something until you're 60 years old, basically. Again, you can't be reliant on the 7, 8, possibly 9% returns on average. You got to look at alternatives, because alternatives can produce double-digit returns at the end of the day. Otherwise, Samantha, you're going to work for the rest of your life. So, sorry again, loaded question. The original question you asked was, what's the process look like? So, the process is very simple. When you think of IRA Club, I want you to think of Fidelity, Vanguard, and Schwab in the same manner. Again, using those three as the example, again, the titans of our industry. So let's just say hypothetically, you have an IRA or a 401k with one of those three institutions. What you want to do with the IRA Club is you have to establish an IRA account first, or potentially a 401k account, depending on the structure that, that entails, or whatever your situation is, or the goals that you're trying to accomplish. But step number one is we want to trigger an IRA account. Why? Because you need that IRA account number so you don't trigger what we just said, a penalty or a taxable event. So we want IRA Club is going to actually do the work for you. So once the account is opened, always recommend that you talk to somebody from our onboarding team. Samantha, you have no idea how many times somebody opens up the wrong type of retirement account. Like, they heard at an event about a Roth IRA and they go open up a Roth, but they have a traditional 401k or a traditional. No, you can't do that. Like account to like account, right? Same tax type, same tax type. The only difference between a traditional and a Roth is, when am I going to pay the taxes? Traditional, tax deferred when you make the contribution. Roth, you pay the taxes up front, right? And the capital gains for the rest of your life is tax-free. Traditional, you will pay taxes when you take out that distribution. Okay? So we open up the same tax ID type of retirement account, move that money over. We will actually go help you get the money and move it over to the IRA Club. And the very last thing that IRA Club requires that you do, that I cannot do for you or anybody here at the IRA Club, is choose the investment for the investor, right? You identify the investment opportunity. The only advice that we always give, Samantha, is stick to what you understand.
Yeah.
So if you don't know anything about, let's say, I hate to say this out loud, crypto, don't invest in crypto. You don't know anything about oil and gas, do not invest in oil and gas. I know you're laughing because you won't even know what to ask these people, like, right, the investment companies. If you understand in your forte is real estate, and you're going to use retirement dollars, because in my opinion, those are the most precious dollars to you, especially if it's a Roth account. I mean, it doesn't get any more precious than that. You want to make sure you're doing something, what to look for, what to ask for, what are the risks, what do I need in order to execute it, all the above, right? So a process, again, is open, fund, invest. The only thing with IRA Club and how do we help you is we're going to make sure it's IRS compliant. We're going to cross the T's. We're going to dot the I's. We're going to make sure that, again, you're not triggering a prohibited transaction. And if you're lost, Samantha, IRA Club better than anybody. Call. You don't know what form to fill out? Call. I think I'm causing a prohibited transaction? Call. So we're going to walk you every step of the way. I kind of like to think of we are a more boutique white glove service. And I think that comes all the way back. It ties into the hospitality in me, right? That's what I come from. That's what I always knew and understand. My niche has always been people, but more so customer service. You gotta handhold a product, right? A strategy, better yet, because this is a strategy that if you as an investor do not know and understand this, let me help you. Let IRA Club help you. Let me walk you through it. And what ends up happening, Samantha, we know this firsthand, is they never call us again. Once they do this once or twice, they never call us again. And what I love more than anything is you're teaching this to a friend, a family member, a spouse, right? To the next generation. That's kind of the process. And again, we went off on a tangent a little bit, but I kind of want really people to understand the limitations that they have and what they don't have when you keep it with an employer.
No, Rob, I really appreciate how thorough you're being. And to be honest with you, I think that you gave such a wonderful understanding of the client perspective. What I want to do now is I want to shift gears to the RIA perspective. So we now know how someone gets involved, from client of RIA side. But one thing you and I touched on last week when you and I had our own discussion about this was how you guys are actually evolving and changing to help RIAs and broker dealers in the full scheme of the transaction and making things more simplified. And so I'd really love for you to talk about what's coming next.
Well, you took the words right out of my mouth, evolve, right? And I always say this, Samantha, in business, if you don't evolve, if you don't change, I kind of like to think of IRA Club as like a living, breathing organism. Like there's constant movement in every which direction. My staff wants to shoot me in the head sometimes because of so much I throw at you because you're dealing with the same thing. But our message was always tailored to the individual, right? As IRA Club has now evolved, we most people do not know that we are a broker dealer, and by being a broker dealer you could offer different things to specific types of clients. In fact, IRA Club works with about 25 other broker dealers where if they're registered investment advisors or if somebody's got a series 65 or 66, this allows them to branch out of their comfort zone, especially when their clients are basically telling them, their investors and the money that's being managed by them, hey, listen to me. I'm sick of the stock market. I'm scared. It's too volatile. I want to take a portion of my retirement dollars and invest in alternative assets. Well, guess what? Maybe the broker dealer that they're currently working with won't allow for that. Right? If you do have a 65 or 66, this allows you to branch out and look elsewhere, right? And IRA Club can facilitate that for the RIA, right? Which stands for Registered Investment Advisors. Remember, think of us as the TPA with the bookkeeper. So let's just say a hypothetical scenario, you're an RIA, your client basically states, I want to buy this asset, right? On 123 Green Street. Or let's just say I want to jump on this private equity deal.
Mm-hmm.
All right. And let's walk through that process. So the RIA would basically be managing a portion of their retirement dollars where they would have to open up an IRA account with the IRA Club. We would move that over from the current broker to the IRA Club, right? Now, the RIA's got two options. They could either add their securities license to optionality, which is our broker dealer, so we could give them that 1%, or they could have the client sign basically a letter of intent that states, hey, whatever my fee is, you are required to pay for it because this is an alternative asset that this specific broker dealer will not pay me on. Where that money comes from, that's up to the client, right? It could come from personal money or it could come from the actual IRA account itself. So they get to dictate and decide, but there is flexibility in that manner. So let's just say again, they want to invest in this private equity deal, and it's just the same process as the individual. The only person that's actually managing it and doing the work is going to be the registered investment advisor instead of the individual. And then what we will do for the RIA or for the broker dealer is we will customize and white label landing pages that look and feel like it's coming from their websites or from their platforms. Yeah. So again, the only thing that you cannot touch is the actual application itself because it's integrated into all of our platforms on the backside, from our CRM being Salesforce to our banking software, which is part of Black Diamond, which to part of our clearing broker, which is Apex. So everything is integrated where we can let the RIA use our training platform at the exact same time. So the one thing that actually the RIAs love, right, once they're doing these private equity deals, is we're the first in our industry to launch an AI trading platform for the RIAs. And why do they love this? Because the actual, we call them AI smart folios, the actual AI smart folio will actually do the work on behalf of the registered investment advisor. It will literally buy, sell, and hold on behalf of whatever that investor's risk tolerance is. So for example, that's the one thing the RIA or me or you is not going to do on behalf of the client is dictate how crazy they want to get, right? Are you conservative? Are you balanced? Do you want to be aggressive? That's up to the client. But we have a list of AI smart folios. The client, you could get into certain sectors like energy, tech, oil and gas. If you just want to be conservative, S&P 500, whatever the case may be. But then the beauty of that is let's just say, Samantha, the client is now again receiving dividends back to the IRA. I'm sorry, to the IRA account. What the RIA likes, Registered Investment Advisor loves, is that money could be shifted to one of these AI smart folios to accelerate his client's portfolio. So money never stays stagnant. It's constantly working for you here. That's the beauty and why RIAs love the flexibility of doing, I like to say, the best of both worlds. And that's what we're providing, the best of both worlds, is I'll let you do alternatives. I'll let your clients do alternatives, right? And then at the same time, here's the stock market as an option for you, right?
So I want to clarify two quick things because I want to make sure I understand this. So number one, obviously you're providing access. I think there's an overwhelming consensus that a lot of RIAs feel, especially the smaller RIAs, they have limited options. So I feel like you're providing access to them and their clients. But as far as it goes with the relationship dynamic between an RIA and you all, is it become a partnership? Do they become one of your clients? Like, what is the actual dynamic?
Believe it or not, it's either or. They could work with our broker dealer directly if they choose to do so. So Samantha, you and I both went to an event not too long ago, right? In fact, we run around the same circles all the time. And there was an event that we went to called Fact Right. And there were two registered investment advisors. I'll say the first person, her name is Angie. I'm not going to give her last name. And Angie loved my presentation on how she's got about super high net worth individuals and they have millions inside their retirement accounts. She loved the flexibility. She was working with a broker dealer, okay? And she did have a Series 66. And she basically was kind of upset that she was only limited to what they were going to offer. Okay. So with IRA Club, think of me like Switzerland. I'm neutral to everybody and anybody. It doesn't matter. My job is to make sure, again, that everything's done the right way. I'm the bookkeeper of that person's retirement account, if it's your client. So she had a doctor, super high net worth individual, wanted to invest in a hospital, right? They were raising funds. It was structured as a 506B, by the way, right? Let's not get into the terminology of what that is, but it was a private equity fund, filed with the SEC. What the doctor wanted to do, invest $1 million of his IRA into this hospital, into the fund to indirectly invest into this hospital. So we literally set her up with optionality with a Series 65. She charged her client 1.5%. So she was a little bit more expensive, and especially because it was an alternative asset. A lot of registered investment advisors, full disclosure, Samantha, will charge a little bit more because of the paperwork. It is a little bit more tedious on the RIA. It isn't like you just search Apple, click on, I want to buy 50 stocks of Apple. Again, a little bit more work. So they are working collectively with the IRA Club, and now we are the TPA for their clients, right? And then they'll have a login where they could see the client's IRA account number, how much is invested, the dividends that are coming back in, access to our AI smart folios. And again, it's a diversified portfolio on our side, the way that we talk about it, you and I, right? Into alternative assets. And again, the beauty of it is Black Diamond, which is our new banking software, gives you a holistic 360 view. And here's what's funny, Samantha. That other broker dealer that Angie was using, their banking software was part of Black Diamond. So she literally logs into our banking software, which is part of Black Diamond, and could see the client's profile here at the IRA Club and her other broker dealer in one spot. And that's another thing that registered investment advisors is you could connect all these different banking softwares, clearing brokers through Black Diamond into one spot on one dashboard. And it kind of gives you just an all around view of how the client's money is growing, charts, graphs, whatever it is that you need to help support and show this to this doctor in particular. So that's another thing that we do for RIAs is we help them, give them access to these certain things that can be very expensive. It's not cheap, as you well know, to have Salesforce or Black Diamond. This costs millions of dollars.
Absolutely. So you talked about client visibility, also the visibility from the RIA perspective. But one thing I wanted to touch on that you could maybe add more clarity to is we're talking a little bit about the administrative side. Well, we didn't talk about the reporting. or like the distributions of these things. I wanted to find out from you, how does that work as far as reporting? Does it go back to, let's say it's through the RIA who's connected with you and they're doing it for a client? Is the distributions that come from that, or the K1s at the end of the year, is all of that done through your process and then sent over? Like, what does that look like?
So again, just think of me like the bookkeeper. I am the bookkeeper for that client. It is very imperative that when you open up this application, we embed for the RIA already, it's called a third-party access form.
Okay.
Because you have to disclose that you will have access to the client's account. It doesn't mean you have access to the client's money. You cannot touch anything in that. You cannot pull money out. We actually will still directly reach out to the client and ask for a verbal confirmation.
Understood.
Okay. So before I pull money out, before I take a distribution, let's just say the RIA fills out a distribution form. So they log into the dashboard and they fill out a distribution form. By the way, everything's done online, or what did I say earlier? Call. I don't know what form to fill out. Call. We'll pre-fill it out for you. Send it to you via hello sign. We see that you've had third-party access form, but we will still call the client to confirm that. Remember, even though we represent you, the RIA, we also represent the client at the same time, right? So it's a mutual partnership. That's the way I look at it. So we will confirm that the last four digits of social security number, their address. We always ask for 2-3 pieces of information. We also ask for 2 authenticia, like either a text message, whatever the case may be, or the amount that they're going to take a distribution for, let's say 50,000. And the reasons why we do this, Samantha, is, believe it or not, we work with over 1,000 RIAs across the country. I hate to say this out loud. I've seen a couple RIAs in the past take out a distribution on behalf of the client as, now maybe it could be an accident, as a fee. And when you call and ask for a verbal and I say, hey, I see a $50,000 distribution, the client's like, what? I never authorized $50,000. And that's why that we do this, right? Which required, and again, there's an organization that I'm not sure if you're familiar with. It's called RITA. RITA governs all self-directed IRA companies. Remember, our bank also requires that we do this. So it's just another level of protection, service, security that we're going to offer both the RIA and the client. But the RIA has full access, right, to make investments, to work directly with our compliance team, our investments team. So let's just say, and I hate to say this to you out loud, a lot of registered investment advisors, they don't understand the rules behind how to make an investment in the alternative space. Let's say that private equity deal that we talked about, because they never were taught in school, right? Or they never studied it. So they'll depend on us to do the work for them. You'll be surprised how many CPAs call us. They have no idea. They never heard of this concept. You can't do this. No. And that's where I'm talking about artificial restrictions. So, and that's what I'm not a fan of, is the artificial restrictions that are created by registered investment advisors, by fiduciaries, that basically say, you can't do this, right? You can't invest in this private equity deal. And who says so, right? There's only 3 things that you cannot invest your retirement account in: your own S Corp, you cannot invest in your own life insurance policy, and you cannot invest in a collectible. That's it. Everything else is fair game, right? To the RIA, to the investor, to the capital raiser. You could invest in anything that you want.
I think a registered investment advisor who understands that, whether or not they're active in the alternative space, by having you or the IRA Club as a tool in their belt, gives them the ability to grow their business and grow within the market when they weren't educated. You mentioned the conference that we attended, and one of my favorite parts of attending the conference was walking around and chatting with the different advisors, understanding their pain points, and that's ultimately why I did this series, was because I wanted to be able to give resources. It was an overwhelming consensus that they're limited on resources. Alternatives are an area where they see the growth happening, more allocation going there, their clients wanting it. But a lot of times they feel that they can't get enough education to stand by the commitment as a fiduciary, right? So I think you having this is a very important piece, is why I thought it was really, really valuable to bring you on the show and the program. And when I talk about, growing because of having this option. One thing I'd like to know if your perspective on is the access to alternatives in this way. How do you think that will actually help them, like RIAs, strengthen their client relationships or even retention?
Well, I think you just took the words right out. Remember, this is a tool for all registered investment advisors, and alternatives, again, numbers don't lie. You have to think, and I mentioned this earlier, double digit returns, and you got to be able to produce those. And the only way that you could really do that is through alternative assets. Okay. Every single thing today is working against someone's retirement account. You're talking about the market being very volatile right now, right? You have no idea what Mr. Trump is going to say tomorrow, and something might crash. We know that the US has a progressive tax system, which means there's only one direction, and that's up, that they're going to be going. We know that every single government program, from Social Security to Medicare to Medicaid, is in complete shambles. In fact, the last 2 years, our government's dished out, I think, roughly $2.3 trillion. And those numbers are not sustainable anymore, right? So there is a real concern. Is Social Security going to be around, right? And then inflation is working against you right now. And I think, although it's trending in the right direction, is now shifting back up to I think we're just under 4%. And so that 4% is working against your 401k. All of these things are working against your clients. If you're the RIA, what's the course of action? What must you do? And the answer is very simple. It's, you got to diversify one's portfolio, and alternatives work in your favor against all of these other things that are working against you, right? Works with you with inflation, offsets Social Security, right? Who knows if it's going to be around? It definitely is not enough, right? I think the average is what, 1,800 right now, currently 1,900. Fixed income annuities are also, in my opinion, everyone's situation is different, right? Doesn't matter. They're going to guarantee you 5%, not worry about the volatility of the market, but you're capped at 5%. So even if you put $250,000, and let's just say you just retired at the age of 60, that's just under $1,100. So let's just do simple math. $1,100 plus $1,800. Is that enough for you to live off of every single month?
No.
No, absolutely not. The average retiree is actually spending about $50,000 per year. Of course, that's not enough. So it's either you're going to work for the rest of your life, or you have to have other solutions for your clients in particular. So for RIAs, you just said it, we are a tool, a necessary tool. We are a necessary strategy. And all I'm telling you is, just identify the investment opportunity. Don't worry about the opening and funding. That's the easy part for IRA Club. All right. Just pick the investment, work backwards with me. Identify the investment opportunity, then call me, and then we're going to open and fund the account on behalf of your client. And we'll give you full access as long as that third-party access form is signed off on, where you could review and see and do everything that you need. But again, it's the last part, right? That IRA Club cannot do for anybody. As a self-directed retirement account, I'm giving you the flexibility to do anything you want outside of the three things that I mentioned, all right? Those three things, or causing an actual prohibited transaction. So when you're working with a Fidelity, Vanguard, Schwab, or the other 10,000 brokerage firms, you have to be careful as the RIA. Why? Because one of the things, Samantha, that's really starting to tick me off in the last 3-4 years is they're starting to adopt our terminology, right? They're telling the RIA or the investor or the client that's with them, you could self-direct with us. Why do you got to go over to IRA Club? That's what they're saying now, right? And that's really started to bother us, because it's not true self-direction.
Right.
Like if you were to invest in, let's say, a private equity deal, and you were to walk up to your current broker and say, hey, I found this investment opportunity on 123 Green Street, or again, this private equity deal or syndication, whatever it is. And what do you think they're going to say to you?
Absolutely not.
You can't do that. You can't do that. That's a part of the portfolio over here. And what they'll try to do, again, artificial restrictions, is here's a pool of other investment options that mimic what the client may want, or a REIT or whatever it is. But again, you and I know the average REIT is going to give you somewhere between 3 to 4%. The fee structures are drastically higher. That's the other thing that we forgot to talk about, Samantha, is fee structures for RIAs. You're talking about providing, IRA Club provides a flat fee model for your clients, not a percentage-based model. Now, you may charge a 1%, 2%, whatever it is that you want to charge, or 50 basis points. That's on you. But IRA Club, as your bookkeeper, only charges $195 to manage the asset for you and your client. $195. We don't care if there's 10,000, 100,000, or 10 million. We're just going to charge a couple $100. That's it. And the answer that I always get from RIAs and other investors is like, how the hell do you guys make money at $195? Well, it's per asset, right? So it's $195 to manage the retirement account. We're the bookkeeper. We're going to do the RMDs, the distributions, the 1099Rs, the 5500 forms. We're going to do all that for you. But the way we make our money is per asset, per investment, right? Each investment that your client does with us is an additional $195. And the other thing, full disclosure, is remember, we are a broker dealer. If you decide to use our trading platform, we're not going to charge you the asset fee of $195. So we charge your client $7 a month. $7 a month to use our AI trading platform or pick your own stocks. Keep in mind, if you are the type of RIA that is doing options trading or doing futures or whatever it is for your client, this is not the platform for you. The AI Smart Folios, designed by a company called iFlip, which is the tech company that owns the rights to the AI technology, basically will charge a tiered structure. Still a flat fee model, but it's a tiered structure. The cheapest it is let's just say from 0 to 10,000, it's $0 a month. From 10,000 to 25,000 is $10 a month. 25,000 to 50,000 is $40 a month. But once you get to 100,000, it's capped off at 140. That's our broker dealer, which is optionality. So that's 1,000. If you pay up front for the year, it's 1,580 for the entire year. So think about that for your client. Per 100,000 that you have, let's say again at Fidelity, Vanguard, and Schwab, the average, if you go Google this number within a 401k employer plan, is 2.27%. That's the average. So per 100,000, they're basically taking $2,200 from you.
Right.
So we're capped off at 1,580. That also is for your clients, for you, or anybody that wants to utilize the AI trading platform. And the only thing I just want to make sure that everybody understands with the AI trading platform, it is the perfect vehicle to protect and preserve one's retirement account from what in particular market drops. That's what it's designed to do, right? You remember the 2008 crash. Think about, or actually 2022, when according to Fidelity, someone's 401k lost 21%. So our AI trading platforms across all of them combined lost 3.9%.
Oh, wow.
So I basically tell people, would you rather lose 20% or would you rather lose 4%? That's what it comes down to. And again, what I think one of the most powerful advantages is, and what we always talk about is, in my opinion, the most important asset in your life is time, right? Time is something you will never get back. Time is money. And if you were that one individual, let's say you're approaching retirement, right? You're 58, 59, 60 years old. You are now, you see a light up to the tunnel. You got 6, 7, 800,000 inside a 401k. You've been busting your ass for the last 20 years. Unfortunately, your company does not offer some sort of pension and you're reliant on this money, right? You're depending on this money, and you lost half in 2008. Do you know how long, Samantha, it took to get to that break-even point?
No.
4.4 years. That stinks. So you got to work now 4.4 years extra for what? So that's what the AI does. It protects against market drops ultimately.
Well, I think I want to end on that note because I'm floored with everything that your advancements you're making, the evolution that you guys are creating, and the access for RIAs. So if there is someone listening who would like to connect with IRA Club, how do they do that and who should they reach out to?
So first of all, I always tell people, educate yourself, right? Education is key in my eyes. If you go to iraclub.com, and there's a great resource center, there's hundreds of man hours of videos. There is a podcast where we talk a lot of everything related towards retirement accounts. You would probably want to schedule a call. We have 2 advisors. That's one thing, by the way, Samantha. Remember, as a broker dealer, I want you to talk to one of our advisors that are on the schedule a call, like on the top right side, schedule a call. And I would want you to talk to either Nick, Kat, you could talk to myself, you could talk to Kasha, because the other thing that also, Samantha, is we do have a sister company where a lot of registered investment advisors love the fact that they could set up business plans, 401k business plans, and remember, self-directed 401k plans. And I think that's where a lot of registered investment advisors have been working with my team in that aspect, is to offer your company and all of your W-2 employees access to alternative assets, right? Through a 401k plan, not just the stock market, right? Now, the money does obviously have to be invested from day one, right? But so there's also IRA Club SBS. That's another platform that you should be looking at and educating yourself on, and directly reaching out to us on behalf of a small business. And then lastly, there is a great sponsorship guide that we have on the IRA Club website to help educate your investors, to help guide them what those next steps will look like for you. And remember, we're going to provide you the tools that we deem necessary. Samantha hit the nail right on the head. We know your pain points. We know what bothers you guys. We know the movement of money is very frustrating at times. And most of all, I know you don't understand the concept of how to use someone's retirement accounts to invest in other deals. So we're going to help you every step of the way. Don't worry about that. As I mentioned earlier, just pick the investment, and then we'll handhold you every step of the way. I hope, again, that was educational for not just the RIAs, but the individuals, even to small business owners. There is a strategy for all of you. We look forward to always, helping, assisting, and opening up doors and opportunities at the end of the day.
Wonderful. Well, I want to thank our listeners and thank Ramez for joining us today. I appreciate it so much.
Samantha, always a pleasure. Can't wait.
Ramez just gave us a full breakdown of how you can utilize the IRA Club for your clients to give them access to more alternatives for their portfolio. Next week, I sit down with the founder and CEO of Potter Wealth Advisors, Anna Ninjakonte, a 3-time Investopedia Top 100 advisor who's built her firm around the next generation of high net worth individuals. She walks us through what implementation actually looks like when private real estate becomes part of the fiduciary's everyday practice.